business credit cards are typically for people who want the longest term of 0% APR, or they're just starting up. Finally goes to the third branch. They're like, oh yeah, we could give you up to 100K, no documentation, no problem.
Wow, that's crazy.
You see people with millions of dollars in debt, but also have a Lamborghini. And then you see people that have just one credit card, but are making millions of dollars in revenue.
People have millions of debt and they're buying like Lambos and stuff.
Oh, I'm opening up 14 more branches of my electronics store, or I need to flip 10 more houses, or I need $1 million in funding by joining a business credit card funding company where we help thousands of entrepreneurs get millions of dollars in funding.
All right. Welcome to a brand new episode of Beyond the Grind, everybody. This is episode 4, and this podcast is to help business owners with your grind. And she is back for round 2, my great friend, Jana. Jana, how you doing?
Doing all right, Mike. How are you?
I love it. I'm loving life. Can't complain. Our last podcast kind of went on fire. I went viral. At least one of our clips on Instagram what's that, like 40,000 views right now?
Yeah, it's over it. And some people are trying to start arguments, but I kept telling them, you need to watch the whole podcast because things were taken out of context in Instagram, obviously for reels. And that's why, it's good for people to watch the full video so they could really understand all the details that we chat about.
Totally. Hey, before we start, just quick question. So like when you get comments like that, like on Instagram and everything, like I guess comments that are kind of, I guess you can call it like trollish a little bit. Like 1, how do you react to it? And 2, like what do you do? Like what's your mindset, or like what are your tips on like ignoring the noise?
Sure. I kind of first vet the comment I'm seeing. Are they trying to just argue for the sake of arguing, or are they genuinely trying to learn? If they're genuinely trying to learn, I will make it a point to take the effort to respond to them, answer the questions. But if it's a troll, depends on my energy level. If it's like at night and I just don't have time for it, I'll just ignore it, right? Otherwise, if this person really is just making it look bad in the comments, I'll like let them know what's up. So honestly, it depends on my mood. At the end of the day, when it comes to social media, when it comes to putting yourself out there, you're going to get trolls. You're going to get a lot of haters. You can't please everyone. And that's just all part of the game. Just got to have a, thick skin and understand what's worth your energy and what's not.
Gotcha. Perfect. That's awesome. Yeah. I mean, I think there's a lot of people out there that kind of get rattled by the comments and stuff like that. But yeah, so with that said, in our last podcast, we were talking mainly about just like business credit cards. So you're giving tips about that. And, I think that's the craze right now because, people are trying to find any way possible to not only fund their business, but other real estate ventures out there, because we all know banks are just super strict that. But, after a lot of, viral clips and things like that, you're back on the show. So thanks for joining us. And today we're just going to be focusing more on business lines of credit, or BLOC for short. So, first question is what's the difference between like a business line of credit and then also like business credit cards that we talked about last time?
Sure. So business credit cards, they are a credit card format, which you could use revolving credit for as much as you like until you actually close the account. Business lines of credit are similar. They are a revolving account as well. But what I would say the major difference is it could get you those higher amounts of funding, those six-figure fundings that people are typically looking for. Another thing that's a little bit of a difference is typically with business credit cards, especially with credit card stacking, people want to get those 0% APR intro offers. Whereas business lines of credit, they don't really offer that. They go off the prime rate, and sometimes depending on the bank, they'll add another rate of their own. So you are paying interest once you start using it, as opposed to the 0% business credit cards. You get that intro period where you're not paying interest.
Got it. So, I mean, to kind of carry off of that, like why would someone use that as opposed to like business credit cards? Is there kind of like, is it obviously you can win both ways, right? But what are kind of like, why would someone do a business line of credit as opposed to a business credit card?
Yeah, that's a great question. So it depends on 2 factors. It depends on the business owner themselves and their business, and then also what are their goals for the funding. So typically with 0% APR business credit cards, it's for people who have startups. And the reason why is the majority of business lines of credit are only available to businesses that have been in business for 2 years and older. And the reason why that is because 80% of businesses fail within the first 2 years. So if you're thinking about it on a bank's perspective, their main goal is to mitigate risk. They don't want to lend out money to some business that's very, very risky in its startup phase. You know what I mean? That's very risky on their end. So that's why business lines of credit are typically for people who have an H entity or have been in business a longer period of time. And they are also for people who want bigger lines of credit, like literally 6 figures. For example, we get a lot of construction companies and a lot of real estate flippers. So they know their numbers very well, they essentially use business lines of credit as a form of a gap funding or as a form of a bridge loan, right? Because it's easier for them, if they have a good personal credit score, to get this 500K funding for them to do a quick flip, because they know their numbers, they know what the profit's going to be, so that they could pay off business lines of credit without accruing so much interest. Whereas a 0% business credit card, it could be for someone who's just starting up, right? Because there's less risk. You have that longer period of time where it's 0%, longer period of time where you can make mistakes. So that way, and not only that, it gives you less funding. Again, blocks, they could go 6 figures, whereas, business lines of credit, we have something called like the 2K slap with American Express. But people who don't know how to optimize their credit profile and they apply for business funding with American Express, say the Amex Blue Business Plus, they'll get 2K as a credit limit, right? So it really depends what their goals are. So just again, to summarize, business credit cards are typically for people who want the longest term of 0% APR, or they're just starting up, right? And that's because business credit cards give less of a credit line, whereas business lines of credit are for people who are more advanced. They understand their numbers and their profit so that they could pay off that line of credit more quickly without accruing so much interest, and they'll get access to way more funds.
Wow, that's pretty amazing. That's amazing. I mean, I'm gonna say this again. It's so crazy how they don't teach this in school. It's just like it's so criminal, dude. Like it's so ridiculous. Like how as long as I've known you, you've been pretty active. Business credit cards, just credit cards in general. Now you're kind of shifting over to business funding. So can you kind of tell us a little bit about like your background and experience, helping business owners with this type of funding?
Absolutely. So where it all started was about a few years ago when I started a business myself with my business partner. We do co-hosting for Airbnb, so essentially property management for short-term or mid-term rentals. And we realized in the process as we were learning, we're like, oh, we need capital, but we didn't want to put any of our own capital in. So that's when we took a couple courses that helped us understand how to leverage business funding in the form of business credit cards. And then I put it upon myself to learn a little bit more of the business funding side with business lines of credit by joining a business credit card funding company where we help thousands of entrepreneurs get millions of dollars in funding. So it's been a blast. And it's crazy because you see everyone from different walks of life trying to get business funding for their business. You see people with millions of dollars in debt, but also have a Lamborghini. And then you see people that have just one credit card, but are making millions of dollars in revenue. So you really get a mix of people. And what it is really is we're not aware that this is available to businesses to essentially get huge amounts of funding to be able to scale or even start their business from scratch.
Wow, that's good, dude. That's crazy how you're people in millions of debt and they're buying like Lambos and stuff. It's like
they're like, I need this business line of credit so I could get a new car. And I'm like,
yeah,
okay,
yeah, definitely. So, I mean, to that point, like, what do you see business owners using these lines of credit for? Is it more like, emergency fund? Is it more like payroll? What's kind of like the common uses of the lines of credit?
There's two major uses. One is to start up, right? It's a brand new business. It needs funding. One of the major reasons why businesses fail is because they don't have enough capital, right? They think they need to fund it all from their own capital, not realizing there's access to all these business lines of credit. So that's the first one, startup costs. And the second one is scaling. So you have business owners that have been in their industry for decades and they're like, oh, I'm opening up 14 more branches of my electronics store, or I need to flip 10 more houses, so I need $1 million in funding. So it's really for, typically starting up or scaling.
Got it. And with that said, going back to kind of like the differences, because, business credit card, you get an actual card in the mail, right? So this line of credit, is it like they just wire you funds? Do you just pay interest on what you use? Is it like check writing privileges? Can you go a little bit more into detail about that?
Absolutely. So you only get interest on what you use, and they basically dump it into your bank account, right? You say like, hey, I want this amount. They'll dump into your bank account, and that's when the interest starts accruing. And that's when you start using it and the time starts ticking. Whereas business credit cards, of course, there is a time limit when it comes to the 0% APR business period, but you could keep either open as long as you like, right? The revolving credit, it's open as long as you like. That's what makes a difference from a loan, where a loan is just a specific time period and then it ends. Whereas these revolving lines, even though you say, for example, use up your 12% APR business credit card period, one hack that people don't realize that they could do is you can call and ask them to extend it. A lot of people don't realize you could do that. A lot of people feel like whatever it is written in their letter is the hard truth and they can't do anything else. But if you say like, hey, can I get 3 more months, 6 more months, I'll be able to scale my business, or you have a really good reason, they'll be like, sure, right? They don't realize that they could do that. It just takes a phone call.
That's great. So it's like, who do you call specifically? Just like, is there like a special customer service rep? Is there like a titled person you reach out to do that? Or
yeah, it's just the number on the back of the card, and then they'll get you the right person.
Okay. So you mentioned earlier about, I think you said you had to have an X amount of years in business to get, some of the business lines of credit funding. Are there any other requirements that a business has to have in order to take advantage of this funding?
Yeah, absolutely. So first and foremost, business lines of credit still check your personal credit profile because you're the personal guarantor. So they're going to see how long you've been in business, right? And they want to see at least 2 years that you've had your entity established. So they typically will work with, S corps, LLC, C corps. It just as long as you have an entity established, because that's what they consider a legitimate business. That's compliance to the business structure. They also want to see your revenue because some business lines of credit, which we help people get, are no documentation. That means you don't need to show any proof of your business. Whereas other business lines of credit or even business credit cards are low documentation. That typically means just showing them 3 months of bank statements so that they can see that your business has revenue. And then other lines of credit are full documentation where they need everything, your tax return, bank statements, profit and loss. So we try to focus on the no documentation business lines of credit because that's how you can get funding much more quickly. And then also you'll be able to access that capital without having to go through the hassle of providing all those documents. So that's another thing. You also want to make sure that because it's based on your credit profile, you want to have a strong credit profile. And that typically means 5 revolving accounts and some credit mix. So some credit cards, some installment loans like auto, student loans, or a mortgage. You also want to make sure that all of your payments are paid on time for those accounts, as well as you want to make sure all your credit cards are under 30% utilization. That's essentially the magic number that the banks use to underwrite to determine how much of a credit line that they want to give to you, or even if they want to accept you as a business customer to lend money to. So it's typically those. And then I would say also you want to make sure that you don't have more than 3 hard inquiries per credit bureau in the last 6 months. Because what happens is if the banks see that you're applying to so much credit one after the other, they're going to think that you're desperate for credit. For some reason, maybe your business is going under, or it just doesn't look good if you have so many hard inquiries. So I would say those are all the major factors that people should consider when applying to a business line of credit. It definitely requires you to keep all your ducks in a row for sure.
Wow. Okay. Gotcha. Cool. So everybody listen to that, take your notes, put that list down, because once you're ready to go, you can start applying for this type of funding. I know I am for sure. So what are kind of some of the rates you've seen out there? Obviously, with the business credit cards, sometimes it's like 24%, it's a little bit higher. So with the lines of credit, what type of rates and terms are you seeing right now?
So it actually matches the national prime rate, which you could find off of the Wall Street Journal. It's probably around 9% at the time of this recording. So they will go off that, and that's not a good rate. The prime rate right now is super high. Just a few years ago, it was like, 3%? But not only that, sometimes banks will add their own rate on top of that, maybe like a percentage or 2. So your total interest rate for the business line of credit is maybe around 10 or even in the double digits. Mm-hmm. And that's why it takes an advanced business owner to be able to leverage business lines of credit, because you really need to know your numbers to make sure that you can pay it off as soon as possible, because at the end of the day, that interest is going to eat into your profit, and you're going to want to make sure that you don't use more than you need.
Got it. Yeah, that makes perfect sense. But I mean, it's 10%. I mean, it's still going to be lower than your typical credit card. So I think there's still advantages there. But yeah, you're definitely right. I mean, I've learned the past 2 years, knowing your numbers is so key. I mean, that's definitely one of my weaknesses and something I'm trying to improve upon. So yeah, I mean, that's definitely valuable information. So with that said, obviously there's a lot of information floating out there. I used to be involved in doing commercial funding before for businesses, and there's information everywhere, and there's myths, there's speculation. So what are some of the myths that you've encountered about the business line of credit?
For business lines of credit, one of the major myths that I've come across is everyone thinks that all the branches within the same bank act the same. They are all uniform. They have the set guidelines and rules that they follow, but that's actually so untrue. So for example, one of the banks that are really great for business funding, especially business lines of credit, is PNC. People don't realize, because it's not in their face, that PNC is one of the top largest banks in the United States. And they're very generous with their credit limits. For example, we've had over dozens of clients get $100K in business lines of credit from PNC with no documentation. Mm-hmm. So one of the things is, the reason why I'm getting into this myth is because people think that if they get a no from one branch, that means no for all of the branches. We had a client, let's call him Alex, and he thought that we were lying when we said that you could get $100K PNC block with no documentation, because he went to the branch closest to him in San Diego and he said, they asked me for documentation. You guys are lying. And we're like, no, go to a different branch. He's like, okay, fine. So tedious. Goes to a second branch. Luckily in California, there's lots of branches. And they said no again. They said, no, you need all full documentation. and he was getting pretty upset. And we're like, it depends on the banker and it depends on the branch. If you truly want this funding, the success of your business depends on you finding the branch that will give you no documentation. Finally goes to the third branch. They're like, oh yeah, we could give you up to 100K, no documentation, no problem.
Wow, that's crazy.
Right? He got it. That's what people think. They think whatever they see or whatever they hear, that's it. That's final. When even in the credit card world, it's not final. It depends who you talk to and it depends where you're at.
Man, that's crazy. Yeah. See, I was one of the ones that knew that or thought that every branch is the same. Like it was just all of a network of banks just like working together. But yeah, I mean, that makes sense that, every branch kind of operates differently.
Add to that, if that's okay, not even just every branch, but every business relationship manager. Because for some reason think that they're against you. They don't want to lend you any funding. You have to remember they're a bank. They want to give you funding. They're on your side. They want to help you out, right? A lot of people think they're evil for some reason, but they're absolutely not. So if you can find a business relationship manager that's just nicer, more willing to work with you, they can really pull strings. And we talk about this all the time. If you find someone that's a business relationship manager that you have a connection with, sometimes they're in the military or you're the same ethnicity, they're absolutely willing to work with you to get the funding that you need.
Wow, that's great. That's cool. So, someone who wants to get business funding, like what are a couple of tips you would suggest, like getting their ducks in a row before applying? Is it, I guess nail like the top two things. Is it like your personal credit? Is it like history? What are the two things you would suggest a business owner to work on before they apply?
Get business credit cards or business lines of credit?
Business lines of credit.
Business lines of credit, it would be absolutely their personal credit profile, right? That has to be as optimized as possible. When I say optimized, again, under 30% utilization, everything is on time and paid. They have, a good credit history, good credit mix, and then also the way that their business is structured. If their business is structured in a manner that is in compliance with what the banks are looking for, then they're more likely to get business lines of credit because the bank sees, oh, they're serious. They're not just a person trying to do a side gig. They're actually a fully functional business trying to get everything in order so that they could attain funding to essentially make more money. And when I say business structure, I also want to allude to business industry. So we talk a lot about, real estate and a lot of people that use this funding for real estate purposes. But what people don't realize is real estate is considered a risky industry by the banks. For some reason, real estate, trucking, construction, a lot of real estate industries are considered risky. So if you put your industry as real estate on your business application for funding, they might deny you or they might give you a really crappy credit limit. So hack is, even though you do have a real estate business, it really depends. Like if it's very obvious on your LLC title, Jana's real estate, you can't really get anything there. But if it's a little bit more generic, like maybe properties, you can say it's more management and consulting rather than just fully real estate. That way you have a better chance of getting more funding.
Wow, that is an amazing hack. So you would say for example, I already created my LLC already. It has realty or real estate in it already. Would you suggest just applying for a consultant or like something that's not?
So is that the title of your LLC already?
It's not mine. I'm just saying if there's somebody out there.
It's already the title. What I would do first is I would test it on a 0% APR business credit card to see if you're getting funding. If you're getting funding, then you're like, okay, I'm fine. But if you realize that you're starting to get more rejections, if you're really trying to get the funding you need to scale, it might be worth your while to actually do a name change just so they can easily identify you. Because if it's just too obvious if it says realty, you know what I mean? But what people have done for branding purposes is you make your LLC or your S Corp generic, right? Something Hudson Consulting, right? But then your DBA would be more branded, like realty, properties. And on your business application, I would just leave the DBA blank.
Good point. Okay, gotcha. Cool. All right. So kind of going a little bit back to business credit cards, we talked about that in full length in our previous podcast. So make sure you tap the video here to access that. But I had a couple more questions related to that. So what are some like tips that entrepreneurs or business owners can use to leverage, 0% APR credit cards? Because there's a lot out there. I mean, you helped me get that Blue Amex one and things like that. So how can they leverage that the 0% APR card?
Sure. So, I mean, there's a funding strategy called 0% business credit card stacking. And what you can do is essentially first, again, it always comes down to your personal credit profile. Once that's optimized, you also want to consider bank relationship. And remember, different banks operate different ways. For example, Chase is very inquiry sensitive. Like they don't like to see that you're applying with different banks. They're like a jealous boyfriend. They're not going to lend to you if you see that you're working with other banks. Whereas American Express, they're not inquiry sensitive. So you can have literally 3 or even 4 hard inquiries in the the last 3 or 6 months, and they're okay. They'll still lend to you. So it really depends. It takes a lot of strategy and sequencing. So not something you can kind of go over in just one podcast, but essentially what you want to do first is really leverage your own bank relationships first. So for me, I've had Chase when it was a grandfather, when Washington Mutual was grandfathered into Chase. I've had it like all my life. And so that's what I started using to get business credit cards with 0% APR because they already know me. As opposed to a new person trying to sign up with Chase, if they just go in and try to like sign up for the Chase Inc. business credit card, they're not going to get a high credit limit compared to myself because they know me. What you want to do as a tip is if you're trying to get into Chase ecosystem, which I recommend all business owners get into because they have such great funding products, is you want to build that relationship first. You first want to do a personal round of funding where you get just a regular Chase credit card that's personal with no annual fee. And that will be your Chase credit card forever. That will stay in your credit profile to build that relationship. Then if you want to get business funding, you're going to want to open up a business checking account with Chase, right? Again, Chase has all these internal data points that they consider in their underwriting when they're extending to you business lines of credit. So if you could dump as much capital as possible in that Chase business account, 10, 15K, and let it season for at least 14 days, and then apply to business funding specifically through a business relationship manager, because Chase is very relationship based. So is Bank of America, so is US Bank. They want to know you, right? Before they lend you money, right? They're kind of dating them. Again, they're that jealous boyfriend. They need to know, right? That's what you want to do in order to set yourself up for the best approval. So it's really about building relationships. And then on the flip end, there's other cards that are smaller, like credit unions and just smaller banks. Umpqua is very, you might know about it. Umpqua is very popular in the West Coast. They literally, you don't need a checking account. You just play online. Don't need to talk to anyone. It's all stated information. And their business credit card typically gives anywhere from 20 to 25K credit limit just by applying.
All right. I will apply as soon as we get off here.
Yeah, exactly. So that's actually a great credit card to do balance transfers because it's 0% APR for 18 months. They typically pull TransUnion. Most banks pull Experian. So if you have too many hard inquiries in Experian, it's good to go to those credit cards that pull Equifax or TransUnion. So Umpqua is a really good one. But again, a lot of people make mistakes on the business credit card application because they don't realize it's stated information. So they get a little bit caught up or confused on what to put, and that could result in them having a lower credit line. So
I'm guilty of that.
Yeah, you still have to know a little bit of the details and the common mistakes.
Got it. So like with these balance transfers, usually, with the personal, there's like a fee. Is there a fee for business as well?
Yeah. So any kind of balance transfer, if you do it to a balance transfer card, will always have that one-time fee. It typically ranges anywhere from 2 to 5%. But if you're literally like extending your time to pay it off for another year or so, it's absolutely worth it because I've already done it. I've balance transferred from my American Express Platinum to US Bank Business Platinum. That gives me 18 months of 0% APR. And I also kind of want to talk about that really quickly. A lot of people say like, well, what about that Wells Fargo card? It's 21 months. And I was like, yes, it's longer, but remember, it's a personal card. So if you're balance transferring, so one of the things that people ask me is like, well, what about that Wells Fargo card? It has 21 months of 0% APR. Shouldn't I balance transfer to that to give me a longer period of time? But remember, that card is a personal credit card. A lot of the times people trying to balance transfer are balance transferring pretty significant amounts of money. And if you balance transfer to a personal credit card, your utilization, if it's high, it will be really, really high reported to your personal credit. So even though now, you're getting time to pay off maybe a certain debt, you're actually hurting your credit score. And that's going to prohibit you in the future from getting more funding or more balance transfer cards. So to me, it's just not worth it. We always want to keep business separate from personal because the majority of business credit cards, except for Discover, Capital One, and TD Bank, don't report to your personal credit. So that's why with business funding, we stay away from the Discover Spark or the Capital One, business card or the Discover cards and TD Bank cards. We stay away from those because we don't want it reporting to our personal.
Oh, wow. Good to know. Good to know. Yeah. Because you want to keep, it's good to keep, especially when you own a business, it's good to keep personal and business separate, right?
Exactly. So imagine like you're trying to, utilize all your credit line on that business card, but then it's reporting to your personal. Now it's hurting your personal credit. So that's why when we see clients and they're like, I have Discover and Capital One, I'm like, oh, we can't use those. Sorry. To make new relationships for you.
Yeah, totally. Cool. So I want to, one of our last questions here, like, we talked about it at the beginning of the show about, some of the troll comments that were going on. And there was one in particular that I saw in her post that was simply about like, hey, getting a lot of credit cards is going to hurt your credit score, because you're going to generate a lot of inquiries and things like that. So is it true, like doing this credit card stacking, whether it be personal or business, does that really hurt your credit score? Can you go a little bit into that?
So no, it does initially. So anytime you apply to credit card in general, whether personal or business, will affect your business, will affect your personal credit, right? But it's very low. It's anywhere from 1 to 7 points. It will drop your score, but over time it will go higher. And the reason why people get so negative, like you're opening up so many credit cards, is because they're not doing it in the proper sequence. We mentioned earlier how different banks pull from different bureaus, and each bureau typically only wants to see 3 or less hard inquiries in the last 6 months in order to keep your credit score still positive. So maybe what they're doing is the majority of banks pull from Experian, and they're opening a bunch of just Experian, credit cards. Of course, that's going to drop your score dramatically. So it's about sequencing. It's about understanding which credit cards pull from which bureaus. But not only that, what's even more important to understand is once you open that credit card, say it's personal, it will drop your score temporarily in the beginning. But what it will do, it will increase the credit limit that you have access to overall. And therefore, if you have more credit limit, your utilization overall will go lower. And utilization is the second biggest thing that's considered on your credit report with 30% is utilization. So if your utilization is going lower because your credit limit is going higher, overall that impacts your credit score positively, because it's also showing to the banks that you know how to handle multiple credit lines at the same time responsibly. So over time, it actually helps your credit score, but initially it will drop it just a little bit. However, like I said, if you just don't know the sequencing and what to apply at what times, then obviously people without that information, it will drop it dramatically.
Wow. Good to know. All right, trolls. You heard it here first. Don't troll on my friend's Instagram post ever again. All right. Cool. Okay, cool. Well, we're wrapping up here, Jana. Really appreciate your time again. Can you just tell everybody kind of any final tips we didn't cover about, it can be about business credit cards or business line of credit, and then how people can find you and things like that?
I think the major thing would be don't be afraid of credit cards. I know we talked about there's a lot of misinformation out there painting this picture that credit cards are evil, but we talked about in the last podcast is credit cards are like fire, right? You can use fire for good, but fire can also be used to your demise. But it's up to the person to understand how to use it in a positive way. It could really propel your business to the next level. So I would just say that take some time learning instead of jumping in, so that way you can use debt appropriately to your advantage. And then where you can find me is at Instagram at Jana_Ann. So that is JAINA_ANNE. If you're looking for business funding, hit me up in the DMs. I also focus content on how to use real estate to travel hack. So that's where you can find me.
Awesome. And I think I said this in the last show, and I'll say this again. Everybody, when you DM her, urge her to start a YouTube channel, because I've been begging her to start one because she has so much amazing content. So make sure when you message her to be like, hey, Jana, start your YouTube channel so we can find you on there too. So
you know what? If I get enough, I'll definitely highly consider it.
All right. I love it. Cool. Well, hey, Jana, thanks for your time. It really means a lot for you to come on. And yeah, we'll talk to you soon, everybody.